Thank you to everyone who is here. We have a great presentation for you at this hour. But before we get started, just a few, I know you've heard this repeatedly throughout the day, just make sure you fill out your CLE sheets, to make sure you drop it off. And just a reminder that apparently if you are in a parking garage and you go out towards the Century Center, it sounds like you should be able to leave that way, and it may be free as well. And then if you need to connect via the Wi-Fi, the network is H-Honors, and the password is 1981. And if we can all just make sure that our cell phones are quiet so we can turn it off, that would be excellent as well. So we have been very fortunate to have so many excellent speakers today, and this includes our next speaker, Mark Carnell. He is a staff attorney with the Indiana Supreme Court, the Disciplinary Commission, where he investigates and prosecutes matters involving attorney ethical misconduct, hopefully none of us here, focusing on trust accounts and financial violations. Prior to coming to the Disciplinary Commission, Mark served as the Indiana State Police Officer for almost 27 years, attending law school mid-career. He retired from the Indiana State Police, the legal office in 2014. And then after his retirement with the Indiana State Police, Mark served as the investigator for the Disciplinary Commission, and he later became a legislative liaison for the Indiana Public Defender Council. In 2019, he returned to the Disciplinary Commission, where he serves today. He is a 2005 graduate of Indiana University McKinney School of Law, and in 2018, he earned his Master of Public Affairs and Public Management from the Indiana University O'Neill School of Public and Environmental Affairs. He also serves as an adjunct instructor at O'Neill, teaching public policy. He's also a veteran of the United States Army and the Indiana Army National Guard, retiring after more than 20 years of service. And I know in talking with him, he's mentioned about kind of going all over the state, giving presentations. And so it's an honor to have him with us today to talk about IOLTA accounts. Please welcome Mark.
Thank you for the next 2 hours and 75 minutes. It'll only seem like that. It's an hour. I'm here to talk about trust accounts, as Nate said, and this is hard to follow my boss because she's a very gifted speaker, but here we are, this is what we're stuck with, now you got me. So, talk about trust accounts. So what's in a trust account? What do I use it for? What do I need one? What is IOLTA? And now that I've opened an account, how do I manage it? What do I do with it? What do I have to do to establish and maintain? So we'll talk about this for the next hour or so. Also, as Nate said, I've been in the military, I've been in the state police, and one thing that I really despise is, one thing is, right? Subject-verb agreement, we're supposed to be good authors, is instructors that run over, so I will not run over, guaranteed. What's a trust account? Why? Okay, there's the Black's Law dictionary definition, interest-bearing account, blah, 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 blah. So let's simplify this a little. And it's an account that a lawyer holds to hold other people's money. That's the simple, straightforward. And only other people's money. So why do we do this? Professional Conduct Rule 1.15 says that we have to hold separate from our own property other people's property. So to emphasize that, hold separate in a separate account. And I like to analogize this to apples. So if a client brings me 6 apples, and I hold on to those apples for the client, when the client comes back, I have to give him those same 6 apples back, right? I can't eat one of those apples and replace it with my apple, because what's that? Conversion, right? That's commingling. Or if I take my apples and dump them in with his apples and give him 6 apples, there are his 6 apples, That's also commingling. But keep separate, hold separately. Also, I apologize. You're not supposed to apologize when you start, but I'm obviously getting over a cold, and please bear with me. This is not exciting. I get it. Here we are. Here we go. Also, a couple of notes about this. What goes into an IOLTA account? Nominal amount and for a short period of time. So a little bit about the philosophy behind IOLTA is, okay, as attorneys, we have to keep other people's property separate. Well, if you put it in a bank, and if I see several of us here in the room have a couple of years on, and remember when banks actually paid real interest. Now today, but you're getting like 0.25%, despite the fact that money costs a lot, like home mortgages are up to 7%. However, if that's other people's money, who does the interest belong to? The other person, right? So the idea behind an IOLTA account is that if you have small amounts like $1,000 for this client, $1,500 for that client, $2,000 for another client, and you put it all into an interest-bearing account, how do you figure out who the interest goes to? Well, you could do that. You could calculate it and pay them the interest. However, it's very complicated, so the courts in all 50 states and 2 territories and the District of Columbia are all now signed on to IOLTA. So nominal amounts, short periods of time. So there's an exception to IOLTA, and that's if you've got a huge amount that you're going to hold for a long time, or a huge amount that belongs to one client. That may justify setting up a separate trust account. And then the interest from that account would, of course, stay in that account and belong to the client. But that's the exception. So most of us that are in private practice or handling these disparate funds, get small amounts held for short periods of time. So what's to do with the interest? Well, it goes to the Indiana Bar Foundation. Some more about IOLTA. As I said, the interest goes to the Bar Foundation. The taxpayer ID on an IOLTA account is the Bar Foundation, not yours. So no 1099s come to you. You're not responsible for paying any tax on the interest. The Disciplinary Commission approves IOLTA banks, and there's a list of participating banks on our website. And I think I've already covered this, I apologize. But it is difficult to calculate the interest. So small amounts, limited periods of time. So who needs an IOLTA account? Well, the presumption is that you'll have one, unless an exception applies. And we're attorneys, right? So there's always an exception. So if it was simple, nobody would need an attorney. If anybody could do it themselves, they wouldn't need an attorney. So here we are. Some of the exceptions are in the rule. This is Professional Conduct Rule 1.15. If they're exempted by the Bar Foundation, not very many. Not engaged in the private practice of law. That's where I was, and that's where I am now. For example, I've been a government attorney for the entirety of my career. I was with the Indiana State Police. I did have a private practice for a while. We had a trust account. But since I've been working for the court attorneys are not allowed, we're not authorized to engage in a private practice, so no need for a trust account. Doesn't handle client or third-party funds. They don't need a trust account, that person doesn't, or a government attorney. So you see there's a couple categories that fit there. However, there's an asterisk there. Once again, exceptions. If the government attorney handles private cases on the side, handles other cases that involve client funds, then he or she must have a trust account. More exceptions. Corporate counsel or law professors, again, with the exception if they handle private cases. Exempted by court order. There's only a handful of those. And maintaining a trust account would work in undue hardship. Or out-of-state attorney with an out-of-state IOLTA account. So, for example, I fielded a question a couple of weeks ago from an Illinois attorney. He was going to take, he's licensed in Indiana and Illinois. His firm in Illinois has a trust account. He is now representing an Indiana municipality. Does he need an Indiana trust account? And the answer is no, because his firm has a trust account in Illinois, and that's managed by the ARDC. Up here in this part of the world, especially to the west of us, Indiana has about 18,000 attorneys. Illinois has upwards of 80,000. Think about that. Chicago and all the transactional work and everything going on there. The ARDC is much, that's the Illinois Attorney Registration and Discipline Commission, is much larger than we are. And in this particular example, the ARDC manages and oversees that person's trust account. So the answer is no, he doesn't need an account in Indiana. Okay, so what goes into a trust account? Funds held on behalf of others, settlement, dispersal, other funds prior to being dispersed, and funds taken for advanced fees. We'll talk about that a little bit more. Excuse me. As Adrian noted, there's been a advisory opinion issued in the last couple of months about fees and where do they go. That's handy to have. So some examples. Personal injury settlement. So anybody that takes a personal injury case, the insurance company, like if you're dealing with, I won't name any, some of them are very loath to pay, they eventually do. So they plop out the $25,000 minimum coverage for a personal injury case. And from my time in the state police, I can tell you I did some research. The minimum auto liability insurance in Indiana has not been raised since at least before 1992. So for personal injury in a car crash, $25,000. How far does $25,000 get you today? Okay, so that's neither here nor there. But anyway, back to my example. So insurance company settles, $25,000. A lawyer's going to take 20%. He takes off his $5,000. He pays the expenses. Let's say another $10,000. So where does that other $10,000 go? To the client, right? Where does it sit until it's paid to the client? In the trust account. Another example, a friend of mine runs a small criminal practice. He has a trust account. However, all of his cases are flat fee. But he still maintains a trust account because every once in a while he'll have to take funds for restitution. And so he receives that from his client. Where does that sit until it's remitted to the court or the victim? It sits in his trust account. What doesn't go into a trust account? Well, lawyers owe money. However, there's an exception like everything else, and that's the nominal amount of attorney-owned funds. Okay, what's a nominal amount? Well, neither the rule nor the case law has ever specifically defined how much is nominal. We've been saying, the commission's been saying for years and years, around $100. That's enough to keep the account open, cover any fees that may come out. Most IOLTA banks don't charge fees on the IOLTA account, like monthly fee. However, sometimes check printing charges and that will come out. You have to watch that to make sure that it's not invading client funds. But keeping $100 in today, I would think even maybe a little bit more than that, especially with inflation where we are, might be okay. How much is too much? Well, I can tell you with absolute certainty, $5,500 left in the trust account to avoid overdrafts because I don't want to bounce a check is too much. So somewhere between 100 and 5,000. Here we go. Records. What records do I need? Okay, there's a long list of records there. We'll go into these individually. Like I said, this is exciting stuff. I will do what I can. How long do I have to keep these records? 5 years after the conclusion of each matter. I know I went quickly through the records. We'll discuss those individual entries here. The first one you have to keep is a deposit disbursement journal. And this journal requires that you, this is your running checkbook register. There's the elements that have to be in it. This is in the rule, it's Rule 1.15. And then more specific requirements are in Admission and Discipline Rule 23, the one that covers attorney discipline, Section 29. So all these 29A, okay, that's exciting, I get it. So this is, like the source of funds, client or beneficiary, payee, if it's a check number, description, that's important, the amount, and then the trust account balance. Does this look familiar? Because we've all done one of these, right? That's all this is. It's addition of subtraction. It's addition and subtraction. It's not rocket surgery. One guy got that. I know it's late. I know you're weary. I know your plans don't include me. With apologies to Bob Seeger. Okay, so what other records do you need to keep? Client ledgers. So for each client for which the attorney is holding funds on the behalf of, there has to be an individual ledger. And so for each client, these examples are right from the rule. These, I've cut these, pasted right out of the rule. Here's one up close. So date, source, check number if you wrote a check, description, amount, and total held. So in this particular case, Susan plaintiff's the client, ABC Insurance paid out $30,000, $10 for a settlement, apparently no other costs, $20,000 remitted to the client. How much is the lawyer holding for this client right now? Nothing. Okay, but does he have to maintain this register, this ledger? Yes, and for how long? The 5 years. This many, as my son used to say. However, now he's a 22-year-old paratrooper at Fort Bragg, North Carolina, jumping out of airplanes, to which I never did, so that's good on him, not me. And another ledger has to be kept is the nominal funds ledger. So this is where you account for the amount of your own funds, the attorney's funds, the firm's funds that are kept in there. So source, John Counsel kept it, nominal, and this should stay pretty, unless you add or subtract from it, this should still be the amount that stays in there. So how does all this go together? Well, think about it. If you take client ledger, client ledger, client ledger, add those together, add the amount of nominal funds, that should even out to what your balance is. Does this make sense? So double entry bookkeeping. It's not accounting, it's just bookkeeping. So you have your ledger, you have your register, you have your checkbook, and then for each client for which you're holding funds, there'll be a separate ledger. And all these ledgers, and then the ledger with your money in it, should add up to the bottom line here. Does this make sense? Does that make sense? No, I can't even do my South Park voices today. Sorry. Okay, I know this is bad, but here we are. Okay. When I was with the state police, I could say drugs are bad, but that's not even really true anymore. Go to Michigan. Drugs are not bad there.
We tell our clients that all the time.
Yeah.
Go to Michigan.
Go to Michigan. I went to Michigan. I forgot I had this 4 pounds of weed in my trunk. I'm sorry. Is that illegal? Yes, yes it is. However, we did several years ago create an exception to our OWI laws for consuming cannabis, consuming THC in a state where it's legal. So if the person's not impaired and they're in a crash and they have a measurable amount of THC, that is no longer presumptively an OWI. Okay. What does that have to do with anything we're doing here today? Nothing. But there we are. Okay. Other records we have to keep. Relevant fee agreements. Okay. Do you have to have fee agreements? Well, no, not really. If you're doing a contingency case, like a personal injury, yes, that requires a fee agreement under Professional Conduct Rule 1.5, but other cases do not. You can take a case, of course, on a handshake and an agreement and say, yes, I will do this for you and you'll pay me this much. I would recommend keeping agreements, or at least an engagement letter, so that way there is some written record of what you and your client agreed to. And I think most of us do this, but even guys that have, so a friend comes in and says, yeah, I got a small claim. Sure, I'll do that, $300. And then when things go south, because when does the disciplinary commission get involved? When things go south, right? But fee agreements. So if you have relevant fee agreements, it has to be kept, and it has to be kept for 5 years. Checkbook registers, bank statements, records of deposits, canceled checks. Does anybody still get canceled checks from their bank? No, that's, young people go like, what? Okay, that's the image you get from the bank that comes on your statement now that is illegible and impossible to read. Well, okay, maybe not impossible, let's say difficult. So, canceled checks, records of electronic disbursements, we'll talk a little bit about that, and reconciliation reports, we'll talk about that. Well, here we are, reconciliation. The rule says that you'll reconcile your trust account with your periodic bank statement. Okay, what does this mean? That is going through, adding it up, it's balancing your checkbook. What I'm running into in my investigations, and we only get involved when there's a report or an allegation, or somebody overdraws their trust account and the bank reports to us. So we ask about it. I say, I need your reconciliation reports, and they say, I don't do that because I use QuickBooks. I don't have any reconciliation reports. Okay, back to Mr. Mackey. That's bad. Okay, that's bad. No, the rule says you'll reconcile it. It's a good practice. So even if it's as much as looking at your QuickBooks and making sure that the amounts line up to the bank statement, keep some record of that because the rule requires it. The court wants us to do this to make sure it's a trust account safeguard. What's all this about? This is making sure that we as attorneys are handling well and taking care of other people's money. Other safeguards, these are in Admission and Discipline Rule 23, Section 29C. No personal or business expenses can be paid directly from a trust account. Okay, so client hires you, you do the work, you've earned the money. The $10,000 from this client that's in the trust account now belongs to you because you've done the work. Can you pay your office rent directly from the trust account? No. So be careful about that. This is one that catches people. It's a very simple safeguard, but transfer the amount to your operating account, to your personal account, reasonably soon upon the time that you've earned it. And the rule says it will be promptly transferred out. What does that mean? Well, it's not been defined. As soon as you earn it, that's fine. Only a lawyer or person designated by a lawyer can be a signatory on a trust account. We don't want other people writing checks on your trust account. Nobody wants other people writing out the checks on your trust account without the lawyer's authority. Why? To protect the funds that are in there. One of the first cases I handled when I went back to the commission in 2019 was a practitioner in Johnson County, has 2 daughters. One daughter also went to law school, practices with him. He's well regarded, longtime guy in Johnson County, well thought of, and his daughter works with him. The other daughter didn't finish school. She's constantly in trouble with the law, and he keeps her on as his bookkeeper. Well, she gets into the trust account and does things like pays her infraction tickets directly out of the trust account with other people's money. Is this a problem? How many think so? Yes, that was good for 30 days, and then a 30-day state suspension, and a year of trust account oversight. And what was aggravating in that particular case is this guy had been investigated before with his daughter mismanaging his trust account, and he didn't fire her. He let her continue to manage his trust account after he'd been in trouble once with the commission. That was informally resolved. As you heard Adrian say, we're trying to get ahead of this. We're trying to work these things out before it becomes formal discipline, before somebody gets jammed up. And that's what they did with it. That's what my predecessor did with this guy, was gave an informal disposition. We said, okay, clean up your trust accounting and we can be done. So I would think that the Thanksgiving at their household must be pretty interesting with the 2 daughters, but that's neither here nor there. But once again, the signatories. There's also additional requirements, like the rules written kind of in the past. It says that the statement has to be delivered to the attorney unopened. How many people still get paper statements mailed in the mail? I don't. All of ours are electronic now. So I could probably do some updating. But the point I want to make here is that the attorney has to oversee his people, his or her people, who are managing the trust account. It's a professional conduct rule 5.3 says you have to supervise your non-attorney assistants. And some of my trust account cases have gotten to that, where that's one guy. Anybody remember Stanley Kahn? He's more of an Indianapolis thing. The big floofy hair. The guy that pioneered the high volume personal injury. Mr. Kahn ran into some problems when his income was not covering the expenses, and his bookkeeper started borrowing against the trust account to cover it up without his knowledge. Okay, that's bad. So that ended up being a state suspension and some trust account monitoring. But Mr. Kahn's biggest problem there was not overseeing his person, not watching the trust account well enough. Other safeguards, all receipts are to be deposited and intact. What does that mean? So your client who's, let's say in the import-export business maybe, with goods from South America, comes in and brings you $10,000 in cash, in 5s, 10s, and 20s. And he says, I need to hire you, here's $10,000. Okay, you haven't done the work yet, that money's still his. Can you go ahead and peel 1,000 off for right now and put the other 9,000 in your trust account? No, the whole amount has to go in now, and then you can start taking it out as you earn it. So there's that. No cash or ATM withdrawals, no checks to cash or bearer. That's another blast from the past. I haven't seen a check written to cash for years and years. Well, actually I have, and it was a trust account check. That was bad. Cash withdrawals not permitted. The checks have to be written to somebody. So most banks won't even give you a debit card with an IOLTA account to prevent this from happening. The one case that I'm thinking of that involved lots of cash withdrawals, the attorney was holding this money in his trust account to keep his client shielded from creditors. So it wasn't for any particular purpose. He wasn't holding it to do work against it. He wasn't holding it to pay it to a third party. He was helping his client avoid his ex-wife, avoid the client's ex-wife. Okay, are we seeing a problem here? Yeah, misuse of a trust account. Okay, electronic transfers. Electronic transfers are now permissible, assuming that you keep a record with all those elements we saw on the journal for each transaction. So yes, you can electronically disperse money from your trust account. So when you earn it, you can move it to your personal account. Just keep the records so when, if it's necessary for me to come asking, you can show me what it was done for. Okay. What about cash? So once again, back to my import-export guy, he brings the $10,000 in cash. Or let's say a person in the adult entertainment business comes in with 1s, 5s, and 10s and says, can you put this in your safe? Is that okay? No. The cash has to go into the bank account. Exception if it's a true flat fee case, but we'll talk about that in a few minutes. Okay, commingling. What is commingling? Well, that's when your money and the client's money, I shouldn't say you because none of us will hopefully ever be here, although occasionally I get a respondent in a course, in a class. But when the money gets together and you can't tell it apart. So there's too much of the client money, there's somebody else's money, the attorney's money, it's all in there and it's all together. Why do we not want commingling? First of all, the interest. If that money's in there and some of it's yours and some of it's his and some of it belongs to someone else, who gets the interest? Well, once again, we don't know how much goes to whom. I guess you could do the math, but that's a minor issue. Lawyers, creditors. If the lawyer's hiding money in his or her trust account and the lawyer becomes subject to some kind of action like, I don't know, not paying his taxes, the IRS, as soon as they do, trust accounts are generally not subject to attachment unless the IRS or the other creditor can make a good case, a prima facie case, that it's not other people's money in the trust account. Subject to attachment. Erroneous invasion of funds, okay? Attorney's supposed to, what does this mean? Attorney's supposed to be holding $10,000 for a client. They accidentally write a check from the wrong account. They think it's operating, it's actually coming out of the trust account. $3,000 gets paid out to a legitimate creditor. Now the trust account balance is down to $7,000. They're supposed to be holding $10,000 for the client. That's invasion of funds. That is actually conversion. Now it's not criminal conversion because they didn't intend to take this money to exert unauthorized control over it, but it still happens. And the last one, temptation. And a lot of these situations that I see, the money's sitting there, somebody with a small limited toolbox to respond to issues, they're jammed up, the assistant's jammed up, they need cash, there's all this cash here, nobody will miss it. How many of us have heard of the embezzler that legitimately believes, and I saw this in law enforcement, that they are going to pay it back. They believe in their own mind that they're going to pay the funds back. How often does that happen? Almost never. Because it's the same kind of management that got them in that problem, keeps them from getting out of that problem. But if the money's there and it belongs to somebody else and it's sitting in that trust account, in fact, I've got an investigation going on right now where an attorney in a firm found an older partner's dormant trust account, which should have been closed, and started borrowing against it. Okay, that's bad. So, yes, temptation. Overdraft reporting. Okay, I think I've mentioned this. Banks that participate in the IOLTA program have to report to the commission if the trust account is overdrawn. And that's where the majority of our trust account investigations start, is the trust account's overdrawn. The trust account should never be overdrawn, right? Because it's other people's money, there's a little bit of the lawyer's own money in there, it should always be above zero. However, things happen, right? Sometimes things happen. But if it is overdrawn, the bank reports it to us, and then we start an investigation. And it looks something like this. No Monty Python fans? Okay. Mike? Okay, I know I'm getting old, my references are dated, and nobody expects the Spanish Inquisition until they enter 15 times. That's the gag, right? No, it doesn't look like that. Overdraft investigations, what happens here? Well, let's get to the numbers first. Okay, in the last annual report, we got 46 overdrafts, reports of overdrafts from banks over the year, and of those 46, 44 we were able to close informally without resorting to formal discipline. Okay, does that kind of comport with the numbers that Adrian showed you earlier, like how many complaints we get and how many are actually serious enough or legitimate enough to investigate? And like something Adrian didn't cover is like of that 1,400 complaints we get, we actually have categories to dismiss for example, public defenders. And I worked for the public defenders for a while, and the commission gets complaints. Well, my public defender didn't come see me 73 times in that 3 months I was in jail. Okay, and that's maybe a little exaggerated, but we get that complaint. What does the commission do with it? We dismiss it. Prosecutor wouldn't give me a plea deal. Okay, we dismiss those. Anybody entitled to a plea deal? No. No. My public defender or my defense attorney won't propound this brilliant defense strategy that I learned from reading on the internet. And I know this will work, and he won't do it. Okay, do we get those complaints? Yes. Do we dismiss those? Yes. These are all things that get dismissed on their face. Like, they don't raise a substantial issue of attorney misconduct. And the same kind of thing here happens in the trust account cases. So we'll investigate it, the complaint comes in, and then a letter goes out to the respondent, said, "Hello, Mr. or Ms. Attorney. Your account's overdrawn. Please explain." And as Adrian said earlier, don't not respond, because then we don't know what's going on. And it doesn't help. And we will not go away. We will not go away. I mean, we're government employees, right? We get paid for how much or how little we do, right? It's like the BMV, right? No? Okay. Yes?
Question. Say a client writes you a check for, say, $5,000 for a fee. You deposit that into the trust account, and your client's check bounces. Does that get reported to you guys to look into?
So, for anybody that didn't hear in a small room, client writes you a check bounces, you write a check on it,
Let's say you don't write a check
Check,
on it.
or
Just say you make the deposit and you haven't drawn any money out of it.
Okay, in that case, if you haven't drawn any money against it, then it wouldn't be reported because the account's not overdrawn. The check's just dishonored and comes back.
Okay.
What happens then, the lawyer believes the check's good, writes a check on it, and then it overdraws the account. Can we resolve that? Yes, we can. That's one of the 44 in my numbers from 2 years ago, which is the most recent report, that we can resolve because, okay, we provide the documentation, this happens, and almost every time the attorney writes a check to a client and says, okay, the money's not cleared yet, hold on to this check till Friday and don't deposit it yet. What happens? They go to the bank and deposit it. Okay, it bounces. So we get those, we can also close those. There's others where there's bad bookkeeping. So, but back to your specific question, no, if the account doesn't go below 0, we won't get a report. Unless the bank thinks something is fishy, and then they'll reach out to us independently without the overdraft. That's rare. In the 4 years that I've been doing this, I've had one of those, and we'll talk about him at the end. Okay. Also, it says here, responses due within 30 days. If you need an extension of time, reach out to us. We'll grant those pretty regularly. That's not a problem. What does a trust account case look like? Okay. That's a set of bank records and the attorney's records for one case. Okay, it looks kind of messy here because I'm getting ready to put it all together. This is what my day is. So when I get these other cases, like one Adrian mentioned about Mr. McMahon, the child porn guy, so that's a little variety for me. But this is like hundreds of pages of bank records, and this one I was able to close because what happened here, the attorney wrote a check, the bank hadn't, even though the bank said, yes, the money's there, yes, you could draw against it, it wasn't. So the check got returned, and you got an overdraft, and so we come looking. So, and he was a little slow to respond at first. We ended up filing a non-cooperation action on it. That made me really, really suspicious. But when we dug into it, it's all on the up and up. It was an honest mistake. So we were able to dismiss that. But if the attorney had been a little more cooperative at the outset, I think they saw the commission, he saw the commission, got scared, thought we were coming after him, and thought he needed a lawyer up. But then his insurance carrier wouldn't authorize an attorney because that's not the kind of malpractice that they cover. Make sense? So, a little bit more about overdraft investigations. All the other investigative procedures are applicable. So it doesn't mean that I have to stop there. I've got 2 cases that I can think of right off the top of my head that started out as overdrafts, ended up in being pretty full, extensive, bad business dealings. The lawyer supporting bad business dealings through dishonesty and shady dealing. One guy ended up with a year without, the other one ended up with disbarred. So, yes, if we start looking at the trust account and there's evidence of other problems, yes, we can go ahead and continue that. Other violations can be prosecuted, and as I mentioned before, non-cooperation. If the lawyer just doesn't talk to us, that'll be pursued too. And when you get the nasty order, the show cause order from the Supreme Court, most of the time, that gets them to talk to us. However, there's that tiny percentage of people. Why would you let your law license ride on not responding to the commission? Anyway, I don't know. A lot of mental health issues. Anyway, that's neither here nor there. Lawyers, in general, we're not well people. We're not well people. And a lot of this rolls in. So when you see a trust account case with resolved with a state suspension, 2 years of trust account CPA oversight, and 2 years of JLAP oversight. Okay, what do you think happened there? There's other issues afoot. In fact, I'll talk about one, a young practitioner from Indianapolis overdrew a trust account. Why? Because her mom had passed away. Mom was her bookkeeper. Mom was her legal assistant. COVID came, she closed her office, she laid off her staff. And then when mom died, not only was it the personal loss, then also the law office support. That was her only support. And then, to make it even worse, within a few months, her grandma died. And this woman was running back and forth from Indianapolis to Fort Wayne. And this has all been resolved with an order, so I can talk about it. So this poor woman is running back and forth trying to take care of grandma until she died. And what kind of trust account records was she keeping? None. So she was withdrawing from the trust account based on an eyeball of, well, I think I did this much for this client, so I think I've earned this, so I'm going to write myself a check. Well, what eventually happened twice? It bounced. Okay, so, short suspension, there's also some non-cooperation because she didn't respond to the commission, and that's what put this over. Short suspension, state suspension, and a year of CPA and JLAP oversight. Okay, because as I was saying, it's not always just trust accounting, it's often a symptom of other problems going on with the law office or the person. Okay, so we look at your trust account, everything's fine, we dismiss it, nice little thin letter comes saying we're done, or we start the attorney discipline issue, process, disciplinary complaints filed, and that starts the trip, okay? Relatively new change, went into effect January 1st this year. What happens if I've got unclaimed funds in my trust account? Well, the answer used to be, well, if you've done a diligent investigation and you can't figure out where it goes, turn it over to the Attorney General's unclaimed funds. Well, that costs a little bit, it requires a form and all this. So the court has now modified Professional Conduct Rule 1.15, and if you have money that you've made a diligent effort, you can't figure out who it belongs to, like one example from real life recently is, we were looking at our trust account, we found a check from 6 years ago, the client never cashed it, we can't find him now, what do we do? They're dead, they've moved away, they've fallen off the grid, something. So now it goes to the Indiana Bar Foundation, and they'll hold on to it, and the person has to go to the Bar Foundation and ask for their money back if they ever surface. So this is a way to resolve this. The Bar Foundation will do the work and hold on to it for you after you've made a diligent effort to try to identify the funds. And a small provision that I just saw that I didn't realize is that notice of this provision is supposed to be in your fee agreements and your engagement letters. Look at Professional Conduct Rule 1.15H5. So at least mention it, that unclaimed funds can end up in the Bar Foundation. So what goes into a trust account? Client paid filing fees, client paid expenses, settlement funds, if any portion belongs to the client, advances on fees, unearned fees, estate assets, funds to be passed through to a third person. So, yes, all that's other people's money, right? What goes into a trust account? Let's talk about retainers, okay? Adrian mentioned the latest advisory letter. So, what's a retainer, okay? The old traditional term for retainer was somebody would pay an attorney just to maintain his, and I'll say his because this is back when it was almost all men doing attorney work. The client pays the attorney to retain his services. The amount paid doesn't actually buy any legal services. It just keeps the attorney on hand in case something does come up. Does that really happen so much anymore? No, no. So what are often called retainers are advanced fees. So let's use the example of a family law case, because you can't take family law cases on contingency, right? Right? Maybe? If I get your kids back, I get 30%, right?
30% of the kids?
30% of the kids. Yeah. Okay, how are we going to divide that up? Like, when I was growing up, a family was 2.58 kids. I was always looking for that 0.58 kid. So, fees paid in advance for work. So, until you earn it, that goes in your trust account. Flat fees. Okay, what is that? Fees earned upon receipt. So I'll go back to my friend, Mr. Gilbert. That's his first name. Gil does all criminal defense work. Misdemeanor, level 6, level 5 felonies in Marion County. The vast majority of Gil's cases are flat fees. Okay, you got charged with level 5 battery on a, level 5 battery. That's going to be $6,000, and you have to pay it up front. Okay, has Gil earned that money upon receipt? Yes. Can he put it in his personal account? Can he put it in his operating account? Yes. Does he have to give some of that money back if something happens? Maybe. So what do I mean there? And this is what Adrian alluded to. So advance fees. So the attorney takes the case, flat fee, OWI $3,500, that takes you through a trial. And if we have to go to appeal, we'll ask for more. $3,500 gets the client from the arrest all the way through the trial. All that money's earned up front, and the lawyer can keep it. You put it in his pocket, you can take it to the casino, you can put it in his operating account, you can buy a pony with it. That's his money. So what happens if the client comes in, pays $3,500, sobers up the next morning and realizes, like, no, I don't want this guy. I don't want you doing any more work on my case. Does the lawyer get to keep that whole $3,500? And the answer here is no. And this is where it gets tricky. This is an iffy question. If the work has been substantially completed so let's twist the scenario a little bit. The guy goes, takes it up to the eve of trial, and then the client fires him. Okay, has he probably done $3,500 worth of work by then? Probably so. And if the attorney can justify that, no refund is due. But dismissed earlier on in the representation, the unearned part of that fee has to go back to the client. And how much is earned? Well, that's a question. So it's good to keep records, and it's good to keep records anyway. So like each phone call, each pleading you've done, of course, the pleading there will be records, each letter you've sent, all that stuff will show that you've done this substantial work. So when it comes time to figure out how much work's actually been done on one of these flat fee cases, you have a colorable argument for saying how much you kept and how much you didn't refund. And as Adrian mentioned, like, this is what's bad about going behind your boss, like going after your boss. I would never go behind Adrian. That's not right. Going after Adrian is that once you have to refund these fees. Okay. But what's this non-refundable thing I'm talking about here? This was a guy back in 2004, Mr. Kendall, that said, once you pay it to me, it's not refundable under any circumstance. Okay? Based on what we've talked about so far, does that sound like a problem? Yes, it is. And Mr. Kendall was suspended because his fee agreement had that provision in it. So once you paid it, it's mine. If you fire me tomorrow, I keep all of it. No. That provision by itself is a sanctionable violation. So be careful about saying something's non-refundable. Now, you can make it clear that it's earned upon receipt, but that's subject to all the things that I just mentioned. Was there a question?
How does that analysis play in for the rare scenario where there is still the kind of classic definition of the retainer? In other words, this may be for work that's performed, or it may just be available. How do you determine if there's a quarterly amount paid in advance, what's been earned when there's no defined project?
Okay, so the question was, if this is a classic retainer and there's no defined project, that amount would belong to the attorney. Because
you want to do like a pro rata, daily.
I wouldn't think so. If somebody is still engaging in that kind of relationship today, and the client has hired the attorney to be available for some period of time, yeah, maybe there's an argument you could have to refund part of it, the attorney could have to refund part of it, but no. And fortunately, that's not the way things are often done now. But I am not sure that I would pursue an attorney on a classic traditional retainer like that. If it truly is a retainer and they've got the documentation, like an engagement letter that says, yes, you'll pay me $750 a month so I can be your attorney. Which also makes me go think back to my trooper days, where at the tow yard, the guy comes in with his 83 Honda that was towed in, that was already damaged, and he says, you stole stuff out of my car. And of course the owner of the yard's like, no, I didn't, because there's nothing in your car to steal. And this guy says, you'll be hearing from my attorney. Yeah, like he's got an attorney on retainer? Sure. Okay. All right, we discussed this, or Adrian just talked about this, advisory opinions. Part of what the commission is doing in an effort to be more proactive, more forthcoming, more transparent, is we're issuing these advisory opinions. And Adrian talked about this at some length. The most recent one is ethical considerations about getting paid, and it covers a lot of the considerations that we've been discussing here. It might be good to take a look at this. They're all available on the commission's website. Go to the If you Google this Indiana Disciplinary Commission, advisory opinions, it'll take you right there. Another resource, okay, that's the list of opinions. Another resource available is an ethical guidance request. So if an attorney has the question, you can go to our site, download the form, and then upload it through the attorney portal, and within a couple of days, somebody will get back with you. So we won't give advice in like ongoing litigation or something that's already happened, or like I've got this dead body buried in my backyard. Do I use lime or no? Yeah, that seems like a problem, right? Is it? I don't know. I own some acreage in Morgan County. I guarantee you there's no bodies buried. Well, I don't know. I've owned it for 9 years. I can't guarantee there's no bodies buried, right? But I haven't buried any bodies back there. I do have a bobcat. So trespassers beware. Just kidding. I wouldn't do that. I value my freedom too much. Okay, discuss a couple of cases. I picked 2 cases here, and these are both extremes on the culpability for trust account mismanagement. So one ended up, these are ones that didn't get dismissed out. This first one is a minor one. So this person, RGR, practitioner in Lake County, mismanaged her trust account pretty pervasively from 2014 to 2018. She overdrew it. When we started looking, she didn't have any records to speak of. She was making cash withdrawals, and she was commingling. And in fact, her commingling was she had her bird's nest. She had her bird's nest of money. She kept the $5,500 in there to make sure that she didn't bounce any checks. Well, guess what? She bounced a check. So what happened there? She did a conditional agreement. She got a 90-day suspension, all stayed, so she didn't have to do any active suspension. 18 months probation with JLAP and with CPA monitoring. Okay, so that was one. Worked it out with her attorney. We came to a conclusion. The court accepted it, and the court imposed that because she came clean, she was forthright, and they admitted the misconduct. And it wasn't bad. She wasn't stealing anything. She wasn't taking anybody's money. She was just keeping a lot of her own money in there and not managing it. Okay, there's that. However, on the other extreme is the matter of Jared Thomas. I'll go ahead and throw his name out there because he's disbarred. This guy is the other extreme. He overdrew his attorney trust account. Okay, what do I mean overdrew? He wrote checks back and forth between his trust account and his operating account, kept at 2 separate banks, and as soon as one was deposited, he'd withdraw cash. Then he would do it backwards, and he withdrew cash. And he did it the other way and withdrew cash. And he did it the other way and withdrew cash. So he overdrew his attorney trust account by $14,222.19. Okay, so the records he provided showed he was supposed to be holding $13,369 in client funds. So he drained all that, and then he stole from the bank another $14,222 through check kiting. Check kiting is something you don't hear about too much anymore because with checks clearing right away, it doesn't happen. So, what happened here? Oh, I've left out a part. He also received an equalization payment from a client in a divorce, and he didn't remit it to the husband. He got it from his client. He was supposed to turn it over. He kept the $6,000. Is there a word for that?
Theft?
Theft, yes. Okay, Mr. Thomas had some additional problems on top of this because while we were investigating his trust account, it came to light that he was also forging court orders. Like the first one that came to light was an agreed divorce where an Evansville police officer and his wife came to him. It's okay, he represents one, not the other. Everything's agreed, all I have to do is write the agreement, file it with the court, and the court approves it, right? He never did that. He forged the settlement agreement, court approved, and gave it to his client and the client's ex-wife. They were not divorced. Then that happened a second time that we found. And then the third one purported to be a sentence modification order ordering the Warwick County Sheriff to go to the DOC and transport a prisoner from a facility to the Warwick County Jail. So prisoner's dad brings this in and says, are you going to go get my son? Sheriff calls the judge, because small county. Judge says, I've never seen this, I would never do this, this is contrary to law. So what happens to Mr. Thomas? Disbarred. The court said, these acts demonstrate respondents' unfitness to practice law now or ever. Okay, this is the extreme case. This started out as a trust account case, but as I was saying, sometimes the trust account is the tip of the iceberg. There's other problems going on. There's something going on with this guy, I don't know what it is, it doesn't matter to us now, I don't know what he's doing, but it's not practicing law. Okay, any questions? All right, yes?
I'm confused by your statement that we have to keep records of our having reconciled our trust accounts.
Yes.
I mean, once a month I sit down with all my bank accounts, I
You have the
check
right to
little
remain
squares.
silent. Anything you say might be used against you.
Yeah, but I don't write on a piece of paper, today I reconciled the account and signed and dated it. I mean, is that what you want me to do?
Well, I think what you should do now is go get your law license, fold it up,
Right,
put it in an envelope and mail it to us.
yeah.
No,
Not the
I mean, I'm
answer.
reconciling the account, I'm sitting there, I'm checking boxes, everything balances out, I got, everything's perfect, and everybody who's responsible will do that with their bank accounts.
yes.
What more can you do?
I think if you asserted to me, like if we had to come look at your trust accounts and you said, I don't have a piece of paper that says this, but I have done the work and I do this every month, and just what you described to me, I would say, okay, you're reconciling your account. You may not have a record of it, the rule says you keep a record. Am I going to file a disciplinary complaint on that?
But seriously, what kind of record do you keep?
What if you scribbled on your statement? Well, of course, you don't even have a statement, right?
Yeah, in the old days, when the bank would mail it, I would literally check each thing,
Statement.
and I'd scan or photocopy and put in a file a copy of the statement, so I'd have a record, you're right.
Yes. But you're actually doing the work, right?
Well, yeah, on QuickBooks, it checks all the boxes.
Yes. This is something that would probably could be due for an upgrade because the court, as time goes on, keeps amending these rules to make them comport with the real world and how things are going on. So this is maybe something that should be looked at for potential amendment. And that's actually a good thought because, I brought it up and you've brought it up, and I think your situation is not unique. Especially with QuickBooks, if you're keeping it contemporaneously, your records are up to date to the second. So this is something I think I need to look at and talk to Adrian about, and maybe suggest a rule change. Some kind of record that you've kept a reconciliation.
In the case you just run a cash track report in QuickBooks, would that be sufficient for your purposes?
If you send me a QuickBooks report that says that, yeah, this is my QuickBooks for this month and here's everything on it, we're like, you're good to go. Yes?
You may mention that we have to maintain a ledger for 5 years.
Did I say that?
Well, that's what I heard.
Yes.
Well, was I wrong?
No, you're right. I'm being snarky.
Oh, okay. So then, is that 5 years from when the funds had been dispersed from the trust account, or 5 years from when the funds were received into the trust account?
The rule says from the conclusion of the representation, so it would be after dispersal or maybe sometime after that.
Thank you.
Yes?
One of all those shareholders are probably going to retire in a few years. How do we close out the trust account?
No, you don't have to do anything to, you don't have to notify the commission that you closed your trust account. Just keep your records, wind it down, keep the records where the money went when you withdrew it finally, and hold on to that for 5 years. And if your account's closed and there's no other issues that come up, we're not likely to, why would we look at it? Right. Okay, looks like my time's up. As I said, I wouldn't go over, and here we are.